All right, ladies and gentlemen, let's get into it. Today we're going to go over 2 to 3 different trade reviews on the top-down analysis, high probability-based trade setups versus lower probability-based trade setups. Really good video for you guys here. I was supposed to do a 100 trade back test. I actually just spent the last 4.5 hours recording a video doing 100 back test. And then on trade number 96, I open up my back testing, not my back testing, I open up my recording OBS. And as soon as I open that up, MT4, my Soft4FX software just crashed. Boom. Lost all my trades. I had every trade documented in a Word document that I was going to share with you guys so you guys could follow along every single trade. And I lost it. You know, it sucks. But the results were good. But hey, I still want to do the back test for you guys as it is really important. So if this video gets over 40 likes, then I will have that video out for you on Monday. Very exciting. So I got a lot of work to do. And these were the results. Overall, 40% win rate, 2-to-1 reward to risk every single trade. So I'll have all that for you on Monday. I got to redo everything, 4.5 hours. So that sucks. I had everything journaled. So if you guys would like that, like this video, and I'll have it up, a new back test for you guys on Monday. Really appreciate you guys doing that. So let's get into it. This is a trade from Muhammad. He was actually the last video I uploaded talking about how he turned his $2,000 account into $20,000 account. We did an interview with him, so I thought, hey, why not look at one of his trade reviews to see what he's trading. Now, he did go ahead and journal this in detail, which is really nice. So he was trading Swiss yen, 1 minute, rally-based drop supply zone. His first target was 10-to-1. His second target was stopped out at 4-to-1. Okay. Notes, he took a low-risk trade on this because it is counter trend. He risked $80 on this. TP 10-to-1, TP2 was set at 15-to-1. Entire trade yield him basically 9-to-1, $700 in profit. Hey, that's awesome, man. Congratulations to him. That's how he's turning his. Oh, look at that. Look at that. I still haven't deleted it. Oh my gosh. This was at the start of my back test. This was like the third or fourth trade in. Only up 4%. So it was at the very start of it. But oh man, that hurts me to see that. Hey, we're gonna redo this back test. Whew. All right, let's get into it. This video gets over 40 likes within 48 hours. I'll record the video on Sunday and I will upload it for Monday. So this was a trade on Swiss yen. What I really like about this, let me blow this up so you guys can actually see this. There we go. Let me scroll in too. Oh yeah, there we go. Much better. So here, what I really like about this is look at his supply zone. You guys know the whole basics of the methodology. We understand we're trying to look for strong imbalances between buyers and sellers. Let me ask you a question. If there is a serious imbalance between buyers and sellers, do you think prices will slowly grind down like this? Or do you think it will have a very sharp movement to the downside? All right. It will have a very sharp movement to the downside if there is a serious imbalance between buyers and sellers. So that's exactly what he was doing here. He saw a huge amount of sellers coming in. 1, 2, 3, 4. 4 very strong candlesticks to the downside. Price also broke his upward momentum line or trend line, whatever you want to call it. So we have this black line here. That's an indication that, hey, sellers are stepping in. Buyers are starting to get exhausted. As well as we started removing opposing zones. Now, this is important concept in the methodology. We're going to go over a trade review of a trade that I don't like and for the following reasons. Now, this has been heavily backtested, and we have thousands of trades that we've looked at in my trades, including when we do our 6-month review and yearly review. Thousands, have been documented, and we find the best trade setups come from when you get both momentum lines being broken and the opposing pivot point zones or opposing zones being removed. That makes the zone a tradable zone, meaning, hey, it actually did something rather than doing nothing. You know what I mean? It's like if a zone doesn't remove an opposing zone or break trend lines, or it's not located inside higher time frame zones, that makes the trade less quality. Now, keep in mind, those trades could still work, but over the long run, they're going to be a lot higher quality if they can break trend and removing the opposing pivot point zone. So he has a rally-based drop supply zone up here that broke trend, removed the opposing pivot point zone. He's got a tight base up here as well, which is nice. It's not, you don't want to have prices shooting up and down, like all over the place, having a wide base, because that really doesn't represent imbalance, you know? Price is shooting up, then it's shooting down, then it's shooting up, then it's shooting down. It's like, who's in control, buyers or sellers? So price stalled out here going sideways, and then we have a very strong move to the downside, which is very nice. He got filled on the pullback over here, and then how he's managing his trade, he got out at a 10 to 1 down here. Just very, very nice, you know. Hit his 10 to 1 take profit, and then prices reversed. And then he had his stop loss on his second position, which was stopped out at break even. So congratulations to him on that trade. Let's bring you through another one. This is a trade of a setup that worked really well. We talked about this in our Wednesday trade review meetings, talking about what's good and what's not good. This is like full on top-down analysis every Wednesday we do as a group meeting. And what I just explained to you guys in the previous trade with Muhammad about the importance of removing opposing zones and breaking trend lines, it makes the zone a lot higher quality. All right, this has been my results and many other people's results as well, just because it adds an extra layer of confluence or confirmation, if you want to call it, to say it's a higher probability that the zone will work. So in this case, he took this short position, which did work. Even the best zones will fail and the worst zones will work. But over the long term, you want to be taking higher quality trades. So this one did work out, but notice how prices never actually broke his upward trend line. You can see down here, never broke his upward trend line, nor did it remove his opposing demand zone. Instead, prices just dropped and then rallied back up into it, and then he got in short, right? It didn't really, it's not declared a tradable zone. You know, I only trade at tradable zones. That's how you'll see me trading on all my trades, always tradable zones. And it didn't do any of that. So in this case, it's not a very good trade in my book. Now, another point that I would like to add here is there is no journaling process. This is something I mentioned when we did our recording, is there is no data that he added. Let me ask you something. If I sent you this trade versus this trade, which trade would you have an easier time understanding? This trade here, where I'm adding notes, hey, what the trend is, why I'm looking for buying opportunities, the quality of the lower time frame zone, you know, how I'm managing the trade. Like, if you were just given two pictures, this trade or this trade, which one would you have an easier time understanding? That one or that one? Probably this one, right? So it's important that we journal all our trades with notes. In this case, hey, we're in an uptrend. Let me blow this up so you guys can see it. Hold on. So you can see here, we're in a higher time frame demand zone, 1 hour uptrend. Prices also pulled back into this 1 hour demand zone. We're also above the 200 moving average as well. So we have more evidence to say why buyers might step in here. Drop-based rally demand, removes supply. We continued the trend in an uptrend. We're also bouncing off of the upward momentum line, right? So we have a really good higher time frame correlation about why buyers might step into the market here. So we should be looking for buying opportunities. I mean, last time it came into this area, look how far prices went off. It went over 4 to 1. Very strong move to the upside. That's letting me know a lot of buyers came into the market. So now we go down to our lower time frame, and then we're scoring out the zone. If we focus on here, you know, hey, we have an overextended market. This is a video I uploaded a couple of weeks ago, maybe a month or two ago, talking about overextended markets. Drop, base, drop, base, drop, base, drop. We have like 4 or 5 in a row. That's calling the market to be overextended, meaning we might get a very strong move happening to the upside soon. It's like stretching a rubber band. You let go, it snaps, and you know, and it hurts your hand. So the market is getting overextended here. We understand on the higher time frame, we want to be looking for buying opportunities. We're in an uptrend. We're inside a good quality tradable demand zone with good strong leg outs. We're above the 200 moving average. We're bouncing off of the trend line, right? So we have 4 or 5 different things about why prices might go up from here. And then on the lower time frame, we get our confirmation. We get our break in downward trend lines. We have zones being removed, right? Going back to the first trade review about why we want to see zones being removed. We want tradable zones, right? We want it to actually prove itself. We want the zone to prove itself that it's a tradable zone and it's done some work rather than just rallying up, right? It's going to create a higher quality zone. And then we're simply buying the pullback when prices come back into it. And then however you want to take profits, 1-to-1, 2-to-1, two take profits, one at 2-to-1, one at 3-to-1, maybe one at 10-to-1, however you want to manage your trade and take profits, that's up to you. Definitely some really good top-down analysis here, breaking down, hey, what's the whole strategy? What's our mindset? How to be journaling your trade? How do you expect to go back, say, a year from now or 6 months from now and know what you're thinking from this trade here, right? There's not much data that you can pull from here, right? Versus this, you can pull a lot more data, okay? And if you guys have any questions about this type of stuff, you guys can always reach out to me on social media at Moneyball Austin, Facebook, Twitter, and Instagram. And when you guys watch these videos, I really appreciate you guys subscribing, leaving a like on this video. Like I said, hey, if this video gets 40 likes, I will have that 100 trade back test for you on Monday. This was a fantastic video bringing you through the top-down analysis, the importance of journaling, and taking good trades. All right, guys, have a great time. Have a great weekend. Cheers. I will see you guys soon. Bye-bye.